Welcome back to the show. Last week, the Treasuries posted, actually in the overnight session, Treasuries posted new 2018 lows, and that coincided with rates into new highs for the year. Oddly enough, the dollars remained somewhat limited considering the move in Treasuries and some of the other foreign currencies. For a look at why and what we should be watching this week in the U.S. dollar, let's bring in our next guest. I'd like to welcome Alan Nuckman, from Agora Financial to Futures with Ben Lichtenstein. Alan, great to have you back with us. It's been a bit since you've been on the show. Good morning. And you've been missed, Alan. I want to talk a little bit about the dollar and what you've been seeing in terms of the relationship with the other foreign currencies. But first, I'd like to get your thoughts on the jobs data Friday, because while there's been a lot of focus on the headline number coming in lower than expected, last month's numbers were revised way up. So they kind of balance themselves out, correct?
Yeah, exactly. So the revision is what people are looking at. What got some attention, obviously, was the little bit of pullback in increasing on hourly wages. So it was really a net nothing. I think that you saw how it opened okay, but people were just following through on some profit taking that we had on Thursday. If you look at the overall macro market, and we can't go up every day if we look at the stock market. So we're seeing a bit of a pullback, and it'll be important to see how we react this week, obviously. I'm focused this week on Fun Day Friday, when we can look at when we see some earnings come out for equities, and we're looking for 20% earnings growth for this quarter as well. That would be 3 quarters in a row. But let's get back to the dollar. All right, the dollar is the focus, and it has been. It did have that blow off top. Yes, it snapped back, and we're now at the top end of that range where it had been stuck between 94 and 95 for a period of a couple of weeks. So let's see what happens next. But you pointed out the obvious, that we're seeing interest rates rise and rise and rise, but the dollar is still about 125 ticks away from its recent highs back in August.
Yeah, so the TNX, the TYX, the FVX, all new highs last week, but the dollar held below 96. If new highs and rates aren't lifting the dollar, Alan, what will?
Exactly. That's my thinking, and I really have the feeling this time that the dollar's put in a top. Now, we might chase it one more time, but in the bigger picture, I think there's more downside potential in the dollar than upside for right now. And you're seeing, the headlines today, the China, Italy, and rates. If that can't knock the dollar to new highs, I don't know what can. So we'll have to watch that. But that's a very important issue right now. To get back to rates, yes, we rallied last week, but my key number on rates, if we're going to look at the 10-year note, is 4%. 4% is big, because that's the halfway mark of the move from 2000, when we were at 6.5%, down to that extreme low at 1.5% in whatever it was, 2016. So 4% is the midpoint. So we're not even close to the midpoint yet. Yes, we're moving higher as far as rates go, but if you look out at the rate structure at the Eurodollar futures to try and give you a little bit of indication of what the market thinks, it doesn't look like there's any rate rises after June or September of next year.
So, one of the things, Alan, that we could look to in terms of why the dollar hasn't been able to work its way back up into those highs, we just mentioned, again, rates on the rise. You would look to strengthen foreign currencies. We've seen a little bit in terms of the British pound, but the yen, for example, recent new lows. The Aussie dollar, recent new lows. Swiss franc, recent new lows. Yeah. I mean, and the only real bid that we've seen come into play, again, as mentioned, well, you could say the Mexican peso and the Canadian dollar, but the British pound has been probably the firmest of all the foreign currencies. Talk to us about what you've been seeing in terms of the basket of currencies and the impact that it's had on the dollar, because if the British is the only one moving up, you're going to, in theory, the others moving down, you would think that we would see kind of the dollar in limbo here a little bit.
Yeah, it is definitely a seesaw, and you're seeing more so, the non-action of the other currencies is because of the dominance of the dollar. So I don't get many keys off the other currencies. You're getting a little firmness, like you said, in the pound. But from a trader standpoint, looking at the Aussie, I think that has upside potential at these levels. The yen, I don't know how much downside there is here, so that might be something to look at to see how that can form a bottom base and see if it can get that kind of capitulation point where there'll have to be some short covering. So we'll have to see with those. But again, it just comes back to this dollar action. Now, let's remember, we've had these conversations for many months that we were concerned about the higher dollar, and that would hurt U.S. multinationals, okay? So then you remember the small caps led the way. Now, I remember I looked at your last segment, everybody's concerned that the large caps are leading the way. So which one is it? Somebody's got to drive the bus, and, I look at it as that both segments are very positive on the year, even with the pullback that we had last week. The Dow is essentially unchanged on the week. The Dow doesn't mean anything, but just the S&P, down 1%. So no big deal. Yes, we had tech pull back, but tech is trading between 7,400 and 7,600. If you look at the NDX, it's come back in that 3-week range. So let's see what the next move is. I don't want to be the guy that's going to ever give up on tech, and I don't think anyone else should at this point either.
So, Alan, one of the concerns right now is Asian indices because they have been a little bit under pressure. We talked a little bit about China coming back from a week off and under pressure this morning. Shanghai down around 4%. Let's talk about the yen because some of the tweaks that we've seen and very small changes to monetary policy, I'm wondering if it's really anything worth taking note of. I mean, anything in terms of a hint towards tighter monetary policy yet?
Well, at some point, we don't know what the point is, but you and I are both price guys, and obviously the price hasn't acted or behaved like
it sure hasn't.
Anything's imminent. So you just have to focus on the price, and it's just just laying in the weeds right now.
Yeah.
I don't know what this is going to be, but something is going to potentially cause a bounce. We're just been range bound as we had been along a lot of other markets. Now let's go back to where we were in the Treasuries a couple months ago. The Treasuries would trade in a 1-point range. If you looked at the 10-year, trade in a 1-point range for 4, 5, 6. So eventually there's going to be a breakout. And so I would just, view that in the same sort of way. And don't try and anticipate that breakout, as we all have learned as adult traders, as grown-ups here, that, let's let the markets tell us where it wants to go and jump on board.
All right, definitely, Alan. A lot for us to watch in terms of currency markets. And as you've mentioned, again, interest rates and bringing in a little bit of discussion in terms of the equities and some of the price activity we've been seeing there. Alan, really appreciate you sharing part of your Monday morning with us. It's great to have you back. It's a little weird not to hear all the screaming and yelling in the background there with the bonds closed today.
It's quiet.
It's very quiet. I bet you it's a little strange down there. Alan, have a great day. We look forward to having you back. Traders, that's Alan Nuckman, the Chief Market Strategist at Agora Financial.